Mercedes-Benz, known for luxury and innovation, has shocked the car industry with surprising news. Their profit margin has dropped from 10% to just 4.7%. But it's not just about profits. There are a lot of things they need to worry about, and these issues reveal trouble for a brand once seen as unstoppable, shaking the industry and raising big questions. What caused such a steep decline for one of the most respected names in the automotive world? Can Mercedes-Benz regain its footing in a market that's rapidly changing? And most importantly, how will this shift impact competitors and the consumers? The answers will reveal how the industry is completely changing right before our eyes. What happened? Mercedes-Benz has always been known for luxury, performance, and advanced technology, but in their latest financial report, Mercedes-Benz revealed a major drop in third-quarter earnings due to big price cuts and ongoing supply chain problems. This news has surprised investors and worried both competitors and customers. This drop highlights deeper issues in the company's strategy as they try to adapt to the changing car market. A key challenge is their push into the electric vehicle market. While the world is moving towards greener options, Mercedes-Benz may have overestimated how ready customers are to pay for expensive luxury electric cars. Dealerships are already feeling the effects of this problem. Unsold models, including the popular S-Class and the new EQ electric vehicles, are piling up, forcing dealers to offer big discounts to move inventory. Meanwhile, rivals like BMW and Audi are adjusting their strategies to take advantage of Mercedes-Benz's struggles. This situation is not just affecting Mercedes-Benz, it's changing the entire luxury car market. What Mercedes-Benz has revealed is more than their own issue, it's reshaping the industry. But how does a company that once defined luxury find itself in crisis? A powerhouse in peril, Mercedes-Benz has enjoyed a storied history of dominance in the luxury automotive market. For decades, it has set the standard for what a premium vehicle should be, combining elegance with performance and innovation. This legacy has cemented Mercedes-Benz as a powerhouse, beloved by consumers and respected by competitors. However, recent developments have cast a shadow over this illustrious reputation. The current financial downturn is alarming. Profit margins, once a testament to the brand's success, have sharply declined from 10% to 4.7%. This significant drop is indicative of more profound issues plaguing the company. One of the primary factors contributing to this crisis is the overproduction of high-end electric vehicles. Mercedes-Benz's ambitious investment in electric vehicle technology was intended to position the company at the forefront of the sustainable mobility revolution, yet this aggressive strategy has backfired, resulting in an oversupply of luxury electric models that the market is not yet ready to absorb. Consumer preferences have also shifted unexpectedly. While there is a growing demand for electric vehicles, it has not materialized at the pace Mercedes-Benz anticipated. Traditional buyers of luxury cars have shown hesitancy towards the high price points of the new electric models, leading to a decline in demand for flagship vehicles like the S-Class and the EQ series. This misalignment between production and consumer interest has created a significant imbalance, further exacerbating the financial strain on the company. Here's where the story gets even more complicated. Immediate market fallout. The announcement sent shockwaves. But what's the immediate fallout? The repercussions of Mercedes-Benz's financial struggles extend far beyond the company itself, impacting dealerships and the broader market in profound ways. Dealerships are grappling with a burgeoning inventory of unsold luxury electric vehicles, leading to significant financial strain. These dealerships, which serve as the front line between Mercedes-Benz and consumers, are finding it increasingly difficult to manage the excess stock. To mitigate losses, many are forced to engage in heavy discounting, which erodes profitability and undermines the brand's luxury image. Competitors like BMW and Audi are adjusting their strategies in response to Mercedes-Benz's predicament. These brands are capitalizing on the opportunity to attract customers who are seeking more competitively priced alternatives without compromising on quality and performance. This shift not only intensifies the competition within the luxury automotive sector, but also accelerates the race towards more sustainable and affordable electric vehicle offerings. The short-term effects on stock prices and investor confidence have been significant. Investors are wary of Mercedes-Benz's ability to navigate through these turbulent times, leading to volatility in the company's stock performance. This uncertainty extends to the entire automotive market as stakeholders evaluate the sustainability of aggressive electric vehicle investments amidst fluctuating demand and economic pressures. And the real shock, this is just the beginning of the storm. Why this matters to you. think this doesn't affect you, think again. The turmoil within Mercedes-Benz has far-reaching implications that extend to everyday consumers, even those who may not be direct buyers of luxury vehicles. One of the most immediate consequences is the rise in car prices across the board. As luxury brands like Mercedes-Benz cut prices to move unsold inventory, these cost reductions can lead to a general upward trend in vehicle prices as manufacturers attempt to balance high production costs with declining demand. This means that your next vehicle could cost significantly more, regardless of the brand or model. Dealership closures are another significant impact. As Mercedes-Benz dealerships struggle to manage excess inventory, some are forced to shut down, reducing the availability of sales and service centers. This not only limits consumer options, but also leads to longer wait times and higher maintenance costs for existing vehicles. The consolidation of dealerships can result in less competition, further driving up prices and limiting choices for consumers seeking both luxury and affordability. The broader economic impact cannot be overlooked. Job losses within dealerships and the automotive supply chain are likely as companies attempt to streamline operations and cut costs. Reduced market competition can lead to decreased innovation and higher prices, affecting consumers' purchasing power and overall economic well-being. Additionally, the financial strain on dealerships can ripple through the local economies, particularly in regions where automotive sales are a significant economic driver. What Mercedes-Benz revealed isn't just their problem, it's reshaping the industry as we know it. The numbers don't lie. Mercedes-Benz's profit margins are in freefall, but what caused the crash? Mercedes-Benz, a symbol of automotive excellence, has experienced a dramatic decline in profit margins, plummeting from 10% to a mere 4.7%. This significant downturn is not a simple financial hiccup, but a reflection of deeper, systemic issues within the company's strategic operations. The root cause lies in the overproduction of high-end electric vehicles coupled with a declining demand for their flagship models. Mercedes-Benz invested billions of dollars into the electric vehicle market, expecting a swift and robust response from consumers. However, the reality has fallen short of these optimistic projections. The company's overproduction has resulted in a surplus of unsold electric vehicles, some lingering on dealership lots for over 550 days. This excess inventory not only ties up valuable capital, but also leads to substantial depreciation, further straining the company's finances. Additionally, the declining demand for traditional models like the S-Class and E-Class has exacerbated the situation as consumer preferences shift towards more affordable and practical alternatives. This mismatch between production and market demand has created a precarious financial situation for Mercedes-Benz, forcing the company to implement cost-cutting measures in a desperate attempt to stabilize its profit margins. These measures, including reducing production volumes and scaling back marketing expenditures, have had mixed results. While they aim to alleviate financial strain, the underlying issues of overproduction and misaligned market strategies remain unaddressed. The financial ecosystem surrounding Mercedes-Benz is now grappling with the consequences of these strategic missteps, signaling a much bigger problem that extends beyond the company itself. Here's the twist: these numbers might signal a much bigger problem. The pricing predicament. How do you sell a car that's too expensive for even the wealthy? Mercedes-Benz has always been synonymous with luxury, offering vehicles that combine superior craftsmanship with cutting-edge technology. However, in its aggressive push into the electric vehicle market, the company has encountered a significant obstacle: pricing. The electric models produced by Mercedes-Benz, such as those in the EQ series, are priced considerably higher than many of their traditional counterparts. For example, the electric version of the S-Class can easily exceed $135,000. While these vehicles boast advanced technology and premium features, the high cost is deterring potential buyers who are seeking value alongside luxury. This pricing strategy becomes even more problematic when compared to competitors like Tesla and Audi, who are offering more competitively priced electric models without compromising on quality or performance. Tesla's Model 3 and Model Y have become popular choices among a broader range of consumers, attracting those who might not have previously considered electric vehicles. Similarly, Audi has successfully integrated luxury with affordability, positioning its electric models as attainable yet high-quality alternatives to traditional gasoline-powered powered cars. Consumer perception of luxury electric vehicles has evolved, with modern consumers increasingly valuing affordability and practicality alongside luxury and performance. The exorbitant prices of Mercedes-Benz's electric vehicles do not align with these shifting priorities, leading to slower adoption rates than anticipated. This disconnect between Mercedes-Benz's luxury image and the realities of the electric vehicle market is undermining its market position as consumers begin to question whether the premium cost of these vehicles is justified. This pricing strategy may not just hurt Mercedes, it could redefine how luxury is sold. The EV gamble. What if the future Mercedes-Benz bet on isn't ready yet? Mercedes-Benz's bold foray into the electric vehicle market has been a high-stakes gamble, one that is beginning to reveal its true cost. The company set ambitious production targets for its electric models, aiming to lead the transition away from traditional combustion engines. However, the execution of this strategy has encountered several critical challenges that have jeopardized Mercedes-Benz's position in the market. One of the primary challenges is range anxiety, a prevalent concern among electric vehicle buyers. Despite advancements in battery technology, many consumers remain skeptical about the practicality of electric vehicles for long-distance travel. Mercedes-Benz's electric models, while equipped with the latest technology, still fall short in alleviating these fears, especially in regions with inadequate charging infrastructure. The lack of widespread, reliable charging stations makes it difficult for consumers to justify the switch from gasoline-powered vehicles to electric ones, limiting the appeal of Mercedes-Benz's electric offerings. Additionally, the charging infrastructure itself remains a significant hurdle. Building a robust network of charging stations is both capital-intensive and time-consuming. In key markets such as the United States, China, and Europe, the infrastructure is still catching up to the demand. This lag has hindered the adoption of electric vehicles, limiting Mercedes-Benz's ability to sell its electric models as practical alternatives to traditional cars. Without substantial investment in charging infrastructure, the company's electric models struggled to gain the traction needed to meet sales projections. And this misstep is shaking confidence across the industry. Supply chain struggles. Behind the scenes, what's really bottlenecking Mercedes-Benz? The glossy image of Mercedes-Benz's luxury vehicles belies the intricate and often turbulent realities of its supply chain operations. Global supply chain disruptions have emerged as a critical factor exacerbating the company's financial woes, impacting production schedules and inventory management. One of the most significant challenges is the shortage of semiconductors, essential components that power modern vehicles. This shortage has been a widespread issue across the automotive industry, leading to production halts and delays. For Mercedes-Benz, the inability to secure sufficient semiconductor supplies has resulted in reduced manufacturing capacity, preventing the company from meeting its ambitious production targets. Material costs have also surged, driven by global economic factors such as inflation and increased demand for raw materials. The rise in costs for essential components like batteries and rare earth metals has squeezed profit margins, making it increasingly difficult for Mercedes-Benz to maintain its pricing strategies without further eroding profitability. The company has been compelled to absorb some of these costs, which has only added to the financial strain caused by overproduction and declining sales. Logistics challenges have further complicated Mercedes-Benz's supply chain struggles. The global nature of the company's operations means that disruptions in one region can have cascading effects on production and distribution in others. Shipping delays, port congestion, and increased transportation costs have all contributed to the difficulty in managing inventory effectively. These logistical hurdles have made it harder for Mercedes-Benz to respond swiftly to market changes, resulting in prolonged periods of unsold inventory and heightened financial stress. These supply chain hurdles are more than just delays. They're reshaping the competitive landscape. The EV hype bubble. What if the electric vehicle boom is just a bubble waiting to burst? The automotive industry is experiencing an electrification frenzy, with manufacturers investing billions into electric vehicle development. The belief that electric cars are the inevitable future of transportation is driven by environmental concerns and advancements in technology. However, this push may be more precarious than it seems. Despite the undeniable allure of zero emissions and cutting-edge tech, several underlying issues suggest the market might not be ready to embrace electric vehicles as broadly as expected. A significant hurdle is infrastructure. infrastructure. Even with substantial investments, the availability of charging stations hasn't kept up with the growing number of electric vehicles on the road. In many areas, particularly rural and underserved urban regions, drivers face difficulties finding reliable charging options. This shortage fuels range anxiety, a key deterrent for potential buyers. Without a robust, easily accessible charging network, the practicality of electric vehicle ownership diminishes, making it harder for the market to expand. The technology also lags in crucial areas. Battery innovation is progressing, but challenges remain in energy density, charging speed, and longevity. Consumers demand longer ranges and quicker charging times, but achieving these goals without soaring costs has proven difficult. Additionally, when considering the environmental impact of producing and disposing of batteries, the overall benefits of electric vehicles sometimes come under scrutiny. These factors contribute to slower adoption rates than many forecasts initially predicted. The inflated expectations around electric vehicle adoption could have far-reaching consequences. If demand doesn't materialize as projected, automakers might find themselves stuck with excess inventory and depreciating assets. Financial pressures could force companies to cut back on research and development, slowing innovation. If the electric vehicle bubble bursts, it could also shake consumer confidence, making buyers hesitant to invest in future technologies. This scenario poses risks not just for individual manufacturers, but also for the broader sustainability goals underpinning the electrification movement. This isn't just about cars, it's about the future of mobility. The forgotten legacy. Mercedes-Benz's biggest mistake, forgetting what made them great. Mercedes-Benz built its reputation on luxury and performance, producing iconic sedans and SUVs. But as the company races to dominate the electric vehicle market, it risks losing sight of what made it a leader. By focusing heavily on unproven electric models, Mercedes-Benz may be alienating the loyal customers who have long valued its hallmark elegance, reliability, and craftsmanship. Traditional models like the S-Class and E-Class, once celebrated as benchmarks of automotive excellence, are seeing diminished attention. As Mercedes shifts its priorities to electric innovations, these flagship vehicles are becoming afterthoughts. Consumers who once looked to the brand for refinement and timeless appeal are finding fewer options that reflect the qualities they cherished. The company's relentless push toward electrification is creating a disconnect, distancing itself from its core identity. This strategy has also undermined the balance between heritage and innovation. While electric vehicles are clearly the future, sidelining traditional luxury models erodes the brand's foundation. For instance, the electric version of the S-Class was expected to set a new standard in luxury EVs, but it hasn't resonated as strongly with buyers as hoped. This misalignment between innovation and tradition creates uncertainty, leaving customers unsure about the company's direction. Meanwhile, competitors like BMW and Audi are refining their electric offerings without neglecting their established luxury lineups. By doing so, they maintain their brand identities while staying competitive. Mercedes-Benz, in contrast, risks diluting its unique appeal. The brand's once iconic status is now at stake as it struggles to uphold its legacy while pursuing ambitious electrification goals. This oversight could cost them their iconic status. Cultural and economic barriers. China, the United States, Europe. Mercedes is losing ground everywhere. Mercedes-Benz's challenges span the globe, affecting major markets like China, the United States, and Europe. Each region presents unique cultural and economic obstacles that have hindered the company's growth and performance. In China, the world's largest automotive market, rapid change defines consumer behavior. The growing demand for electric vehicles has drawn fierce competition from established brands and new players like NIO and XPeng. Economic uncertainty and trade tensions have also dampened luxury spending. While Chinese consumers are quick to embrace innovative technologies, brands must continuously adapt to shifting preferences, something Mercedes has struggled to keep up with. In the United States, Tesla's dominance and an emphasis on affordability and practicality present hurdles. The high costs of Mercedes-Benz electric models and limited charging infrastructure have deterred many potential buyers. Furthermore, the American preference for large vehicles and long-distance driving clashes with the more compact, urban-focused designs Mercedes often prioritizes. These cultural and logistical differences complicate the brand's strategy in this key market. Europe, traditionally a stronghold for luxury vehicles, is another challenging environment. Although the region's eco-conscious regulations favor electric adoption, the market is increasingly crowded. Established automakers and new startups alike are offering affordable, technologically advanced alternatives. Mercedes-Benz also faces economic disparities across European countries, which demand flexible, localized approaches. Yet the brand has struggled to maintain consistent appeal across such a diverse landscape. These cultural and economic factors influence consumer behavior, brand perception, and market share. Mercedes-Benz's inability to navigate these varied demands weakens its position not just in individual markets, but on a global scale. The brand's declining relevance in multiple regions threatens its long-term success and prestige. The consequences of this misstep are reshaping the entire industry. The consumer's burden. Why should you care about the struggles of a luxury car brand? Mercedes-Benz's challenges have a direct impact on consumers, creating new barriers and burdens for those looking to buy their vehicles. One clear consequence is rising prices. To address lagging electric vehicle sales, Mercedes has resorted to price cuts and heavy promotions. This tactic, combined with the inherent costs of advanced electric technologies, has driven up overall prices for both electric and traditional models. Consumers now face steeper financial hurdles, making luxury vehicles less attainable. As car prices climb, buyers are forced to reconsider their spending priorities, reducing the appeal of what was once a more accessible luxury option. Limited availability and longer wait times further frustrate consumers. Unsold electric models piling up on lots can delay the release of new vehicles and shrink the variety available at dealerships. This scarcity increases wait times for buyers who know exactly what they want, leading to dissatisfaction. With fewer immediate choices, potential customers may turn to competing brands that can deliver faster or offer more diverse options. The depreciation of resale values also hits buyers hard. With an oversaturated market of electric vehicles and less demand for older models, the resale value of Mercedes-Benz vehicles has taken a hit. For buyers, this means a more significant financial loss over time. Furthermore, as dealerships face pressure to sell unsold inventory, financing terms may become less favorable, compounding the cost burden for consumers. As these factors pile up, higher prices, limited inventory, and declining resale value, everyday buyers are left shouldering the fallout of Mercedes-Benz's strategic missteps. This shift not only makes luxury vehicle ownership more stressful, but also has ripple effects on the broader economy. Consumers who once looked to Mercedes-Benz for high-quality, aspirational vehicles now face a more challenging, less rewarding experience. The brand's struggles are felt far beyond the showroom floor, reshaping how consumers view the luxury car market as a whole. What's happening at the top could reshape the entire market. Can Mercedes-Benz bounce back? Is it too late for Mercedes-Benz to save itself? The luxury car giant is facing a turning point that will determine its place in the automotive industry. Having built a reputation on prestige, performance, and innovation, Mercedes-Benz now must adapt to a shifting market landscape. A pivotal move would be aligning their production and pricing strategies with consumer expectations. The demand for electric vehicles is growing, but the appetite for high-cost models remains limited. Mercedes-Benz's recent overproduction of expensive electric cars highlighted the need for a more balanced approach. By scaling back on premium electric vehicle production and introducing models that cater to mid-range buyers, the brand could tap into a broader audience. Furthermore, adjusting pricing to reflect market realities will help restore competitiveness. On the marketing front, the company must redefine its messaging. Tesla's success has shown that a clear vision and consistent branding can attract not just buyers, but loyal advocates. Mercedes-Benz could take a page from Tesla's playbook by emphasizing the value proposition of electric mobility rather than solely relying on its historical prestige. Highlighting sustainability, innovative technology, and long-term cost savings could resonate with a more environmentally conscious and financially cautious consumer base. Looking outward, Mercedes-Benz has the opportunity to learn from competitors that have successfully navigated similar challenges. Tesla, for instance, leveraged a streamlined product lineup and an intuitive charging infrastructure to achieve widespread adoption. Adopting a similar simplicity in product offerings, coupled with investments in charging networks, could make Mercedes-Benz's electric models more appealing. Rivian's focus on a distinctive brand identity and targeting niche market segments offers another valuable lesson. By understanding how these companies built a loyal following, Mercedes-Benz can position itself for a rebound. Their next move could determine the fate of the brand. With careful strategic planning and a willingness to adapt, Mercedes-Benz may not only recover, but also emerge as a more relevant player in the evolving automotive landscape. The industry reset. Is the luxury car market crumbling or evolving? Mercedes-Benz's struggles are a symptom of larger shifts in the automotive industry. The traditional hallmarks of luxury, exquisite materials, elite engineering, and exclusive branding are no longer sufficient on their own. Consumer priorities are changing, and the industry is experiencing a reset. Affordability and sustainability now play a critical role in purchasing decisions. This shift is reflected in the growing demand for electric vehicles that balance quality with cost efficiency. As the landscape changes, competition is intensifying. Established brands like Audi and BMW are vying to redefine luxury on their own terms, while newer players like Rivian and Lucid Motors are making significant strides. These entrants bring fresh perspectives, agile production models, and an ability to appeal to a younger, eco-conscious demographic. For traditional automakers, competing in this transformed market means more than introducing electric models. It requires a fundamental rethinking of what luxury entails. Mercedes-Benz must confront these realities if it wants to stay ahead. The reset isn't just about cars, it's about survival. In an era where consumers expect cutting-edge technology and sustainable solutions at a reasonable price, automakers must deliver on all fronts. By innovating around affordability, building infrastructure to support electric mobility, and embracing a more inclusive definition of luxury, the entire industry stands to benefit. Those who fail to adapt may find themselves edged out, not just by new players, but by a market that no longer values outdated notions of prestige. What do you think? Share your thoughts in the comments below. How do you see the future of Mercedes-Benz and the luxury car market? Thanks for watching, and I will see you in the next video.